I'm Dr. David Mathuva, a senior faculty member at Strathmore Business School. And my areas of interest are in accounting and financial markets, of which financial cooperatives fall in. We have different types of cooperatives. There are those who serve farmers, there are those who serve our financial needs, all geared towards societal and economic well-being improvement. But now we've had a case of these financial cooperatives that have been running their affairs. They have grown in size, and yet they are not properly regulated. And as we speak, any financial cooperative whose deposits exceed 100 million Kenya shillings has to be regulated by SASRA. So what these cooperatives have to do is they have to put in all the mechanisms or measures possible to align themselves to the expectations of the regulator, of course guided by this new piece of regulation that requires them to put in place policies, be they credit policies, be they policies touching on their operations, be they policies touching on their governance, and make sure that they comply with what the new piece of regulation requires, so that now they are under SASRA. The other thing, of course, with now more Saccos coming under SASRA regulation and supervision, the issue of capacity comes in and resources, because as we speak, we have about 170 the so-called deposit-taking Saccos who have been regulated by SASRA, 170 plus. But now with this new regulation, it has brought an additional 185 Saccos, maybe smaller. These other 170 plus were larger, very large. But then now we have 185 smaller, but still regulated by SASRA. Now, what this means is the regulator has to work out a way of capacity building and mobilizing resources to effectively regulate these Saccos. Otherwise, it will just be business as usual. And I believe that is not the intent of the new regulatory dispensation. But even as we do that, we still have to think about those other financial cooperatives who are mobilizing savings, getting money from the public and giving out loans, but they are not formally regulated by a regulator like SASRA. And here I'm talking about the financial cooperatives whose assets are less than 100 million. So there's still a lot of work. Technology has, come, and it is with us in the cooperative sector. We've seen, especially for the larger cooperatives, their operations are more or less like banks. They have digital financial products. Today, a member doesn't need to go to a Sacco office to take a loan. They can actually get a loan from wherever they are. Of course, we have some guidelines in that area when it comes to digital financial products, but still, again, the guidelines are not very specific to Saccos. There's something we call in cooperatives the common bond. The digitalization, the technological advancements are going to open the common bond even further. It has been opened, of course, but now with digitalization and technological advancements, that bond is going to expand. And what that means is now tapping onto more members from wherever they are. As long as they've done their assessment and they are happy with that cooperative and they believe they can benefit from it. We've also moved away from the traditional way of guaranteeing, the loans taken. And this means you can self-guarantee. If you've saved enough with a cooperative, a Sacco, you can self-guarantee. You can also provide these other collateral types to get a loan. So these technological advancements are going to help even enhance or expand the financial inclusion, getting more people join these cooperatives, and even letting people select which cooperatives to join and which one not, based on their assessment. I don't know, you might have seen people more likely to associate with the larger, financially sound cooperatives. And that means even the smaller ones now will have to up their game and try to catch up with the larger cooperatives. The other thing I'm seeing that is likely to happen, and this ties to the government of the day, you've seen a bit of emphasis on cooperatives and medium and small-sized enterprises. I'm seeing more collaborations in this space, because look, who are in these cooperatives? These are members. These are people who run businesses. And we are seeing a case where cooperatives are taking up the commercial banking space and supporting MSMEs in their financing, in their needs. And the beauty with cooperatives is that whatever they charge is predictable. So if a cooperative tells you the interest rate we are going to charge is 12%, you can be sure that will be there for long. The rates charged by cooperatives are not dictated by the rates offered by the Central Bank of Kenya. They are relatively stable. And you'll notice even currently, what is happening is we've seen a case where commercial banks have increased their lending rates to 13 to 18%. And what we are seeing now, there is some notable exodus of borrowers from banks to Saccos. Why? Because Saccos are offering cheaper rates and affordable money. Of course, we know the government has come to intervene, but talking about the cooperatives themselves, the charges are very predictable, and that's why we are seeing this exodus of people from banks to cooperatives. and that will have a significant impact in terms of the trajectory these cooperatives are taking. And who knows, cooperatives might take up now the space that commercial banks have been enjoying.